the best example I can give you was in 1970s. There had previously a very ferocious bull market in America. And then values started falling with inflation, Vietnam War, and oil prices are there. So at the peak of the bearish sentiment, the cost of a taxi medallion to run a taxi in New York City was greater than the seat on the New York Stock Exchange. It had become so unpopular being in stocks. Business Week, one of the most popular magazines, had come up with a cover story calling the death of equities. These are all signs when people refuse to, they have to do anything with stocks. People complain how much money they lost in stocks. We don't look at charts. That's a good sign that value is there and value are ready to take off over time. So I think conversely, at the top of a bull market, you will find everyone talking about how much money they made in the top of a bull market. There'll be a lot of leverage trade going on, a lot of interest in F&O, a lot of interest, the famous saying is the panwala will tell you what tips to buy. These are all symbols of, market peaking out. You want to load up. You want to actually load up in a bear market because when values are there, that's when you want to buy it. And then wait. There's one thing that is very pronounced about markets, that every bull market will end, will be followed by a bear market, will be followed by a bull market. So just like we have, the seasons, monsoon comes every year, you miss it this year, get back next year, nothing to worry about. The same thing in the cycle of the market. If it didn't exist, the market game would be over. So it has to happen. It will go from one extreme to the other extreme, from unlove to popularity, from fear to greed. So you need to understand when a bull market is ending, you need to lighten up on equities, take some money home, encash some of your gains out there. And then when the bear market is going through one phase, two phase, three phases, you need to load up on equities. And one more clue is in a bull market is ending, you'll find that good news will come out. GDP has grown by 8%, or some good news, corporate profits at record highs, and the market will not respond. The market will tend to go down on that news. So the market is telling you that it is getting tired, that all the good news is now factored into the market. And the reverse will happen in a bear market. That bad news will come and the stocks won't go down. And that's a good clue that the market is in the process of bottoming out. So these are good clues to keep in mind, how the market reacts to news. If it reacts favorable news, the bull market is intact. If the market stops reacting to good news, that means the market is showing signs of weakness. And if the market bad news comes, industrial production down, corporate profits down, uncertainty on the election front, it's a good sign that the market is bottoming out.